the semiconductor industry alone is now like a $20 trillion market, basically. It's hard, and like crazy thing is like that number was like in the market lows of 2022, that was something like 2 trillion. So it like 10x. And it's a lot harder to go to 40 trillion and then 80 trillion from there, right? So not to say that trade's totally done, but I think the explosiveness is done. And as that starts to just run into just law of large numbers, Bitcoin's over here cheap, still functioning, still doing what it does. And I think that's what kind of eventually sparks the next run.
For nearly 2 years, one trade has dominated global markets. Artificial intelligence has attracted trillions of dollars in capital, sending companies like Nvidia and the broader semiconductor industry to extraordinary valuations. As investors chased the fastest-growing opportunity on Wall Street, Bitcoin quietly slipped into the background. But according to Lyn Alden, Bitcoin's next major move is just ahead of us. Rather than viewing Bitcoin's relatively muted performance as a sign of weakness, Alden argues it could actually represent one of the strongest long-term setups the asset has seen in years. Markets don't reward yesterday's winners forever. Eventually, capital begins searching for the next opportunity, especially when the previous leader starts running into the unavoidable reality of size, saturation, and diminishing returns. If Alden is right, the conditions that held Bitcoin back throughout much of this cycle could soon become the very catalysts that fuel its next explosive advance. And unlike previous bull markets that were driven largely by hype and speculation, the next phase could be built on much stronger foundations. But that's only part of the story. In her latest interview, Alden also explains why she believes Bitcoin has likely entered a major bottoming process, why the traditional 4-year cycle may no longer be the best framework for understanding the market, and why broader macroeconomic trends could become one of the biggest tailwinds for Bitcoin over the coming years. Together, these insights paint a compelling picture of where the market could be heading next. If you enjoy in-depth macro analysis like this and want to stay ahead of the biggest trends shaping Bitcoin and the broader crypto market, make sure to hit the like button, subscribe to the channel, and turn on post notifications so you never miss an update. Now, let's hear Lyn Alden explain why she believes the next Bitcoin bull market may begin much sooner than many investors expect.
When we hit that kind of February low, and we're recovering from that for a while, I kind of had like a base case that might be the low, but it wasn't super high conviction. We ended up, some months later, like that held for a number of months, and then we hit a slightly lower low. The 58K gang, kind of came up on us. So, we hit a slightly lower low, and it's not with high conviction, but I'm kind of treating that like that might be the low. But it's more of that broader scope of, are we in what is, I think, a bottomy type of area, rather than trying to say that we absolutely, won't get like a lower low than we already got. I would be surprised to see us break anywhere below like the 50s. Personally, I'm not saying it can't happen, but I would be generally surprised if that were to happen. So I generally think that the downside, or at least the reasonable downside in my view, is somewhat capped. Whereas I think there's still plenty of room to the upside for the next cycle. As far as the 4-year cycle goes, I think that fundamentally there's really no reason to believe in it, in the sense that the halving cycle, in terms of how much is that's affecting new supply coming to market, is now so minimal compared to earlier cycles where it represented a much larger percentage compared to existing coins. But obviously it's still intact from a price standpoint. It might be, psychology still matters. So not to say that it won't for sure happen on 4-year cycles, but I wouldn't look to that as like a driver per se. I think a much bigger factor is basically what can get inflows in, and what price levels do existing like OGs start to sell some of their coins. Because that's kind of the limiter. People often, they point out correctly that Bitcoin is scarce. And, there's like the whole meme of like exchanges are running out of Bitcoin and stuff. But, if you go up enough in price, you unlock liquidity from otherwise strong hands that have maybe been holding for 1, 2, or 3 or more cycles. And they might have a family now compared to what they had when they, bought it for, 7 raspberries. And, they want some liquidity, and they are, distributing some of their coins. And so I think it's more about what, has fast money exited? What does the remaining holding profile look like? Are they all like diamond hand psychopaths at this point? Then that's how you start getting a floor in, most likely. And then how can you rise above that is getting some external capital want to come in again. And it generally feeds off on itself. So sometimes just stop going down is like the early phase. And I mean, a funny example is like, say, Latin American bank stocks or just Latin American, just emerging market stocks. Eventually, just like so much capital for a long time just flowed out of that. Emerging markets have these really big cycles. So much capital flowed out, but it kind of hit to the point where the multiples were super cheap. They had really positive real interest rates. Things just kind of weren't getting worse anymore. And so some investors say, wait a second, I'm a value investor in that I can buy that bank for like 4 times earnings. Maybe I'll put a small position in it. And then it starts to not go down anymore and then maybe starts to go up a tiny bit. So then you get chartists and momentum traders. They come in and say, well, that actually looks like a pretty good chart. So they jump in, the chart gets better. So then it starts going up and up and up. And similar things happen with Bitcoin. The first step is just, it kind of just doesn't go down anymore. All the people that would sell, a lot of the pools of capital that would sell just are gone. So it's just people that are like ride or die, and then it just stops going down. Like you mentioned, peak apathy, and then that starts to be noticed, and people are accumulating, taking more coins off the market. Some people see that the chart is not half bad, and that gives the momentum traders come in. I think the other thing is that there's that, of course, that quote like Bitcoin's the fastest horse, Paul Tudor Jones. In recent years, AI has been the fastest horse. And so it's like, if you're not first, you're last, kind of like, if it's like, of course, all these funds and investors in the world are allocated to AI, and Bitcoin becomes an afterthought. Now, the AI, like the semiconductor industry alone, is now like a $20 trillion market, basically. It's hard, it's and like the crazy thing is like that number was like in the market lows of 2022, that was something like 2 trillion. So it like 10x that like market. Like basically when you add like Nvidia, AMD, the memory stocks, some of the semiconductor equipment makers, you can define the bucket. But if you get a pretty broad bucket, you can have a set of companies that went from 2 or 3 trillion to 20 trillion. And it's a lot harder to go to 40 trillion and then 80 trillion from there, right? So not to say that trade's totally done, but I think the explosiveness is done. And as that starts to just run into just, law of large numbers, Bitcoin's over here cheap, still functioning, still doing what it does. And I think that's what kind of eventually sparks the next run.
Alden's perspective challenges one of the most deeply held assumptions in crypto, that Bitcoin simply rises and falls according to a rigid 4-year halving cycle. Instead, she argues that today's market is increasingly driven by capital flows, investor positioning, and macroeconomic conditions. Once the majority of weak hands have exited and long-term holders begin absorbing supply, Bitcoin naturally establishes a stronger foundation. From there, it only takes a relatively small wave of new demand to shift momentum dramatically in the opposite direction. But Alden believes another major force has been suppressing Bitcoin throughout this cycle: artificial intelligence. While AI captured the overwhelming majority of global investment flows over the past several years, Bitcoin temporarily lost its position as the market's fastest horse. However, as AI valuations become increasingly difficult to sustain after such extraordinary gains, she believes capital could begin rotating back toward Bitcoin. In the next section, Alden explains why AI incredible success may ultimately become one of the biggest catalysts for Bitcoin's next bull market, while also examining why this cycle felt so different from previous ones.
Presence of AI, as explosive and large as it was a competitor for the marginal dollar going into Bitcoin. More broadly, I think, to some extent, the Bitcoin treasury companies took off some of the froth, right? So at the peak, instead of Bitcoin maybe hitting 200K, you had like Strategy at 3 times MNAV, you had, say, Metaplan at 8 times MNAV. Some of the ones that barely own Bitcoin at like almost infinite MNAVs. The chart we've all seen where it's like you're a SPAC and then it goes vertical and then you just kind of melt for the next few years. So that's where like a lot of the kind of the blow off top portion was. I think what made this Bitcoin cycle disappointing. So on one hand, it is good that we didn't have as big of a draw, at least so far. We didn't have as big of a drawdown percentage wise. But say in the 2017 cycle, if you go up 20x, it's fine to have a 90% drawdown because you're still higher than where you started. If you only went from say 16 to 125, it's a smaller upcycle, and especially when you compare to the prior high. If you go, you peak at 69, you roll over to 16, then you go up to 120. It's like less than a doubling from the prior high. So it's not one of those cycles it'd be really bad to have a 95% correction when you've only doubled from the prior high. So I think the bear market was kind of in proportion to the bull market. And I think what has disillusioned some investors is that now 2 cycles, you had this more of a rounded top rather than a blow off top. And just the overall ratios were not as explosive as some investors thought. And, I think there's different reasons for that. I mean, I think the 2021 was crowded because you had altcoins, you had everything Cathie Wood was investing in, all these kind of like SaaS companies, like the kind of the unprofitable but like high growth stuff. All that was just going vertical with Bitcoin. So it does eventually crowd it when there's tons of at least temporary options. I also think this cycle, Bitcoin and this is like a long-term versus short-term thing. In the long run, Bitcoin should benefit from the broader altcoin space kind of melting away, because it's noise and just it's competition for capital. But in the near term, there was no altcoin season this time, really. The narratives kind of exhaust themselves. You went from ICOs to DeFi to NFTs, to just straight up meme coins, like just kind of admitting there's no there. And then even that, you're past that now. I guess the latest one was the treasury companies if you're not the leading one, you kind of also ran in a way. And it's kind of like they exhausted their narratives. And that kind of whole era is gradually stagnating. And there is some cross ownership with Bitcoin. There is marketing spend that, it in many ways hurts Bitcoin because you pull retail into other things rather than Bitcoin. But when that whole thing's booming and the money's flowing, Bitcoin probably in the near term does some benefit from it. Whereas when the whole thing's melting, Bitcoin has to hold up despite all that structure falling apart around it. So I think it's a combination of AI is taking off, crypto's melting, Bitcoin's this good thing that's not currently the fastest horse, but it's a super valuable thing. It's the best in class of what it does. I think it's still very small relative to its total addressable market, meaning that there's still a long-term appreciation potential there. And I think it's hard to thread that needle in the near term to kind of the investment case is a lot of what I just said, which is not the shortest elevator pitch. Like, hey, it's not going to go as fast as the AI stuff, but you actually own it. And unlike this broader crypto thing, it's not fake decentralized or like super low liquidity or changes through hard forks all the time. And it's like the case is more nuanced when it's not just like, hey, it's the best chart for the past 5 years, buy it.
Lyn Alden's analysis ultimately comes down to one simple principle. Capital is always searching for the best opportunity. Over the last several years, that opportunity was artificial intelligence. Massive inflows pushed semiconductor companies to valuations that would have seemed almost unimaginable just a few years ago. But markets are constantly evolving. As returns inevitably become harder to achieve in one sector, investors naturally begin looking elsewhere. Alden believes Bitcoin could be one of the biggest beneficiaries of that rotation. Her broader message also reinforces an important shift in how Bitcoin should be evaluated going forward. Rather than focusing exclusively on halving cycles or expecting the dramatic blow-off tops that defined earlier years, investors may need to pay closer attention to liquidity, capital allocation, institutional participation, and the macroeconomic environment. Bitcoin continues to mature as an asset, and with that maturity comes a different market structure. Future bull markets may look different from the past, but that doesn't necessarily mean they'll be any less significant. Perhaps the most encouraging takeaway is that many of the forces which disappointed investors during this cycle may actually strengthen Bitcoin's long-term investment case. As speculative excesses across broader crypto continue to fade and AI eventually runs into the law of large numbers, Bitcoin's combination of scarcity, decentralization, and growing institutional acceptance becomes increasingly attractive. If Alden's thesis proves correct, today's period of relative underperformance could eventually be remembered as the foundation for Bitcoin's next major expansion. If you enjoyed this breakdown of Lyn Alden's outlook, don't forget to leave a like, subscribe to the channel, and be sure to check out our other videos featuring Lyn Alden, Raoul Pal, Michael Howell, Arthur Hayes, and many of the biggest names in macro investing and Bitcoin.